Over to Nigeria now, where the business community is waiting to see if interest rates will fall. The central bank governor says it may happen by June. However, inflation is currently above the target band, and the Monetary Policy Committee is yet to be set up, as the Senate has refused to confirm President Buhari's nominees. CGTN's Deji Badmus takes a look at some businesses' concerns.
For quite a while now, Nigeria's President Muhammadu Buhari has been at loggerhead with the country's Senate over the appointment of the head of Nigeria's anti-graft agency, the Economic and Financial Crimes Commission, EFCC. The president's choice as head of the agency is this man, Ibrahim Magu, but the Senate has refused to confirm him, saying he's not qualified, and demanded that the president put forward another candidate. However, the president has refused to budge and has retained Magu as the acting chairman of the EFCC. And in a clear sign of tit for tat, the Senate has refused to conduct statutory confirmation hearings on all nominees of the president requiring Senate confirmation. It's that action that has now caught up with the MPC nominees sent by the president to the Senate for confirmation. Investment banker and financial analyst Johnson Chukwu says the situation is troubling.
For me, that's actually a cause for concern. That's a bigger cause for concern, that over time we're building a system of government where the executive arm is unable to resolve issues with the legislatures, irrespective of the fact that the two arms of government are of the same political party. Today, the failure of the Monetary Policy Committee to meet may not have had major adverse impact. But at some point in the near future, it's going to have adverse impact in managing monetary aggregates. At some point, we're going to have a compelling need to cut rates or a compelling need to increase rates. And when the committee is not there, such decisions cannot be taken.
For now, the CBN has decided to leave monetary policy rates unchanged while it mules an emergency MPC meeting in February, hoping that the issue of the Senate confirmation would have been sorted out before the next MPC meeting in March. But CBN Governor Godwin Emefiele has said the country may have to wait till sometime around July before there could be some easing on benchmark interest rates. Not everyone, though, is convinced that would even make a big difference.
In the Nigerian environment, the effectiveness of the use of monetary policy rates is not very strong. The transmission effect is not very strong. I think what will have more drastic impact is a reduction in cash reserve ratio that will avail the banks of more liquidity to lend. If they just bring down the monetary policy rate, it could be a directional indicator to show the bank that this is the thinking of the government, that they are going to allow for more liquidity. It can only have impact if it's supported by reduction in government sale of treasury bills and other securities. That is a reduction in the more public size that the CBN has been doing. But what will have more impact is a reduction in cash reserve ratio and a reduction in liquidity ratio.
Despite the expected easing, the CBN governor says is coming. Analysts are warning businesses not to expect a corresponding massive lendings from the banks, especially when you consider the size of the non-performing loans the lenders are currently shouldering, which is somewhere around 15%. They say the banks would be very cautious and carefully selective in who they lend to. Deji, CGTN, Lagos, Nigeria.